Hey everyone, it's Nick with Us versus Herd. If it's your first time here, hit the subscribe button. If it's not your first time here, welcome. If you want to get notifications from when we go live, tap the bell. If you are not yet a member of our free options trading group, the link is below. Yesterday we hit 1,000 members in our free options trading group, which is just like, it's insane. That's crazy. It's crazy. We got, how many members we got in Discord? We also got a Discord group. Let's see, what do we got here? Sorry, I got a lot of 270 members in Discord. Hold on one second. What is going on here? Hold on. Okay. We're coming back. We're coming back. All right. We're back. We're back. I'm kind of having a rough week. Anyways, if you're here right now, say what up. SCUEZ, welcome. Thanks for wishing my son a happy birthday yesterday, and all the people that did as well. Thank you so much, Carmine, Ray Lee, Linda, FC, Eamon, Ray Lee, Jeff, Joshua. What's going on? Kevin, what's going on? If it's your first time here, say what up. We want to meet you. Jordan, how you doing? You look hungover. Dude, I've been going since 4 in the morning. I've been getting up at 5 in the morning lately, and I've been going to bed late. We are grinding. I know it's definitely worth it, but you know, Callum, what's up? You know, we only get one life, guys. We only get one life, so we gotta push it. Alex, what up? Got paid by AMD. If you made money today, comment got paid. If you lost money today, comment learned a lesson. Rayleigh wakes up at 2 a.m. Guy's on fire. 2 a.m. What time you go to bed though? What time you go to bed? Today it's saying I'm up $59. I really, I'm gonna go over my trades here today. Before this afternoon, I only did one trade this week, and I traded. So on last Friday, I put the Microsoft strangle on. Then Monday, I put an IBM strangle on. Yesterday, I took off. I did nothing, and today I did a couple. Let's see here. I did 3 more trades this afternoon to kind of go through it. So saying I'm at $59, I definitely. I wasn't timing the markets or anything today. I definitely could have made a lot more money. Like at one point, I was up like $160 per account. I'm still up $60. And mainly because I was on the road. I had my Microsoft strangle. I closed it out down on the position. Was still less. I think I lost about $90 on the Microsoft position, and we can do the math here. Let's see here. So Microsoft, and then I put another Microsoft position on as well. What happened to USO position? We're still riding it. I got back $36 today. We're still riding this USO position. Some of the members like, hey, why didn't you cut USO? Why didn't you do this? And when pricing gets under, when I have a trade on and it gets under 5 cents, I just let it coast. I just let it ride. It came up this morning. We could look at these calls here. USO has been kind of interesting. I haven't been trading it just because it got under. When stocks get under $10, I tend not to do well. It's just the way it is. But if we're looking here at these calls, this morning they were going between 2 cents and 3 cents. this morning, and then it spiked up to like 6 and 7 cents. So that's why I got some money back. Right now, my average on these, I've been holding these for a long time. I mean, my initial position, I started, hold on, you can't see, hold on. My initial position, if you can see this, December 7th. My initial position, then I averaged down on December 13th, and I haven't touched this position in a month, mainly because it's just like, we're just gonna ride it out now. We got some money back today, 36 bucks. I've been in it this long. It's only at like 5 cents. My average is right now 13 cents. So we get a little higher. It'll definitely be good. Definitely would have paid off if you had some calls. USO got some 200% gainers today on or this week's expiration. You have some 400 to 300% gainers for the expiration that I have, which is next week, that I've been holding. It's some decent action in there, decent action. 37 days out, you got the $40 40% gainers, 50% gainers. So, can't complain. We're gonna ride this one out. That money was already counted for lost. Basically, just gonna try to get back to break even. I'm not going to average down anymore. We're gonna ride it. If we get back up to 10 cents, I'll probably cash it out. Probably take back what I lost. We'll be down about $33 because we'll be down $34 because I have 12 contracts. So we can live with that. This was down it was down like 140 at one point. Now we're down 90 on the position. So we're riding it out. We are riding. So yesterday I took off. Today I had meetings all morning, and then this afternoon I forgot that I actually had to go get a blood test. So it's been kind of crazy. I really wanted to trade, but it's really hard for me to trade on the go because I want to make sure I'm making informed decisions. I love trading at my desk. I do trade from my phone, but mostly when I do it from my phone, I'm mostly like closing positions. I'm not really adjusting. I'm not really looking at all the charts, and I'm not looking at everything that I need to look at. So I didn't want to make any mistakes. So you don't want to just go in. Like yesterday, I was gone from 8 in the morning to 8 at night. And I was celebrating my son's birthday and stuff, and you don't want to get too crazy. And then this morning I was gone. I didn't start trading today till 1:20, 1:30, and I closed out my positions because IBM I was profitable on. I only made like $19 on it. I was up bigger on IBM. If we're looking right here, let's get IBM here. I was definitely up more when I was spiking up to 120, 140. It wasn't going higher. So, I cashed it out in here, unfortunately, on the drop, mainly just because, when I started out the week Monday, I had a bearish position on IBM. I also had a bearish position on Microsoft. Both those went against me. However, I had the calls. So, IBM, I was at a loss and I came back out profitable. So I took that off the table to realign it. And then Microsoft, really, I had the same thing happen, except for it took longer to get to where I wanted to go. I had the 100 puts and the 105 calls because I thought we were going to break down. And then we didn't. We actually went up to 104.88 today. And in this mess, I actually bought another 105 call. So that way it helped me out a lot. But also on this drop, I took it off as well. So we lost, I think, about $90 on that as well. It's definitely way harder showing you guys this without showing you my Tastyworks account because Thinkorswim doesn't show my realized in here, just what I did on the day. So I don't like that. So I'm gonna try to figure out on this new PC how to get Tastyworks over here, but not display my username that I'll log in with. I probably have to make some adjustments here to the streaming software or something like that. I'll play around with it, this weekend or maybe tomorrow. So close Microsoft out. We close IBM out, and this other Microsoft trade here, I actually, because I had two calls. So on Tastyworks, so if you have like 2 calls and 1 put on Tastyworks, it'll close out the whole position for you. However, on Thinkorswim, I closed the position out, but as you can see here, it only closed out 1 of each instead of. So then later on, I had to close that second call. So I lost a little bit of money there, but we closed out. I had like $230 in risking here. I lost 90. We made some back on IBM, and then we got some money back overall. So this week overall, I'm down $50 per account, down 200. Nothing crazy, but I mean, what do you expect for only doing one trade this week and not realigning your portfolio? So I wanted to get on some action today. So I bought Microsoft, Square, and IBM. Microsoft, I did another bearish trade, mainly because I told you guys, like, when I lose like that, I only lost once. So that was only the one trade that I lost in the last week or so, recently. So I don't like to flip flop, and it was looking kind of weak. Obviously it was looking kind of weak up here. So I bought the 104 put and the 106 call on Microsoft for $1.30. Got a pretty good deal on it. So it's looking like this for this week. So we're right on the line here. If it does go up above 105, Carmine lost connection. I think we're here. What are your thoughts on the markets being higher because of extended talks on trade or Rousey? We're getting to it. Yeah, don't worry, Andrew. I was not drinking or consuming any alcohol yesterday. Zero whatsoever. So yeah, we don't play. We don't play. Yeah, I mean, if the stream isn't good for you guys, and I just spent all this money, I'm gonna take this PC and I'm gonna take it in my backyard and smash it and then we'll be back on the Mac, which wasn't any better. So it was pretty tight on Microsoft, but we're getting kind of extended. I've told you guys this many times. I don't like to flip flop, and that's when you get like the double whammy. So when you flip flop and if I lose 2 or 3 trades in a row, I'll start examining. But since I only lost 1 trade in a row, my initial assumption is still going to be kind of bearish. I'm definitely not, like, I'm long-term bullish on America and what we're doing here. But as an options trader, you don't get to choose being bearish or bullish. You just trade the numbers, you trade the charts. So like I told you guys, because I lost 1 trade on it doesn't mean I'm going to automatically flip to long. I lost 1 trade on Microsoft, and my first trade of the year on Microsoft that I had like on January 2nd, January 3rd was my first trade of the year. I closed out Microsoft Green by like $80, so like kind of break even on the year for Microsoft. So I'm not just going to flip flop. So we were kind of topping out here, looking kind of weak, and then we had that drop, and it looked like it was going to have that fade. So we'll see what happens tomorrow. We definitely have some catalysts to go lower. However, catalysts to go higher. Earnings season, we're getting to wrap up, and as you guys know, like going into like if the Bulls have control, when the Bulls have control, as you guys have been noticing the last few days, it's just been like really like a slow and low churn, like just really kind of chilling. And kind of looking like, if you're looking at like Netflix, I mean, yes, Netflix had an amazing run from 256 all the way up to 323. But if you like loaded in yesterday, you loaded in, you made some money on this. But then up in here, let's say you're loading, okay, this thing's going to gap up big tomorrow, whether it's long or short, Netflix just chilled all day up. It's down 31 cents on the day, and it's, if you're looking at Netflix here, this is if you were swing trading this, and it wasn't a really good day trading chart for Netflix today, you just got annihilated here. I mean, calls and puts. Here, calls and puts. I mean, these are down. Obviously, these are down. So, like, when I've been warning you guys about this for a while, that when eventually the stock market's not going to move. Like, eventually, we've been really fortunate to have days and months and weeks that we're going up and down, up and down, up and down, and this makes great for options trading. But then when you see a chart like this, down 31 cents of the day, and yes, you could have bought the lows at 313 or rode it up to 323, but I mean, if you're looking at this up and down, 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 and you obviously you can't tell the future. You don't know where we're gonna go. This is so much chop, and we stay the same price that, you know, people are gonna get a little, you know, they're gonna get shaked out, and then they got shook out, and it went up, and then it came back down. So, you know, this was definitely not a day trading chart. And then if you swing trade it, because Netflix has been ripping the last couple of days, gapping up, going like right at open, skyrocketing $5-10, you know, people making money hand over fist. And then that's when you got to be careful. When you start making a lot of money quickly, you got to kind of take your foot off the pedal and be like, okay, we're making money really fast here. You have to assume it's not going to continue. It can't continue like that forever. It can't go on for like that forever. So then the markets, you know, it kind of takes a you know, you'll see this. There's days of consolidation, especially in bull markets. So in bull markets, when the bulls have control, there's lots of days of consolidation. So, and days of consolidation look like this. You know, IBM was the other trade I did today. And Square. We'll cover that. We'll go to IBM and then we'll go to Square. IBM. I trade IBM and Microsoft a lot together just because I like to pair them. You know, Microsoft and IBM definitely offset losses and gains for me. They're definitely for me. Microsoft and trading Microsoft and IBM it's a nice kind of a paired trade. And it was only $1.08 for this. You know, pretty tight spread here. Obviously it expires on Friday, but you know, I'm leaning short as well. I have the 120 put and the 122 call. And if you're looking at IBM here, you know, if you're looking at IBM here, last time it came up here, it came back here. Either we're gonna kind of bust through to 125, which my 122 call will help, or we're gonna get rejected here and we're gonna head back down to like 114 or 115. Either way, I'm good. So and it was pretty cheap. So the one thing that I do like about these up days is strangle plays and the way that I like to trade. You know, you need up days. You need up days and consolidation days for options to get cheaper. Like when we go down, we talked about this on Monday we've been talking about this for the last week or so. When the market goes down every day, things get really expensive, even if the stocks don't move that much. So excellent. Nice to see you. Welcome. I'm juiced for the Square section. Agreed, but either it needs to flush out or we need more tangible news. Not Andrew, I disagree. I don't think it needs a flush or it needs to go up. The market could digest. The market could just digest. And I'm going to be talking about the S&Ps because my title today was kind of like a slow and steady stock market recovery, question mark. Is it going to recover? Is it not? And I'm going to be covering after my Square trade here, kind of what indicators I'm looking at, what charts, you know, what areas on the chart that I'm worried about, which areas I'm concerned about. But I'll also go over areas of consolidation. Like when we have big moves, especially since we've been moving this big for months, the market's going to digest this sooner than later. Whether we move up or down, at some point in time in the near future, we're just going to stop. We're gonna kind of chill, and then we'll go up or then we'll go down. But for Square, my Square trade, I bought this is so much easier on Tastyworks. The 120 put, the 122 call, and I'm sorry. Square, sorry, 132. Square cost me $1.32, and I have the 65 put, the 68 call. I was leaning kind of short. I opened this at 130, which was right in here. We were at like just above like 66. We were at like 66.15, 66.10. Easy. Thanks for the $2 donation, man. Here, cheers, man. Here you go. So what I was looking there, I was leaning short, and kind of like IBM, we're kind of sitting at this weird place on the chart. So either we're gonna go back up to 70 because we did break above this where it was 65, 50-ish area. Not by much, not by much. So that's why I'm kind of leaning. I'm just playing the chart here. I'm not looking at news. I'm not looking at things. I'm just playing numbers. And, here is where we started to have trouble last time, and it came down, all the way to 50. However, if we do break through, as you know, with Square, if anyone's traded Square, like I traded Square a lot, I kind of put my, I've kind of stopped it a little bit, but I'm going to try to trade it a little bit more, just because, it's a stock that I like. It's a stock that I held a long time. I had stock averaging at $33 that I sold a couple months ago, but Square went from $52 to $65 in a week, and that's just like an insane run. It's like amazing, and obviously runs can't go forever, and now we're at this point where, it's kind of dicey here at the 65, 66 area. Definitely been rejected here. Last time I was up here, it went down to like 59. Up here again, it went all the way up from, 59 down to like 63. So, my target on this trade, just because it's a short trade, is really to get to like, it's kind of hard to say because it went from 62 to 66. And if I say, my target in here is 62, which would seem appropriate, really I'm just trying to get down to like 64 area. I wouldn't be trying to push it too much. So 64, at 64, my put would still be worth a lot of money. If it goes down lower, I'm not typically, as you guys know from watching my trades over the last couple weeks or months or however long you've been watching me, I'm not the type of person or to leave my gains on there. So if I'm at like, it's at like 65, I broke below 66, I'm at 65, I'm watching it. I'm going to sell at like 64, 63 area. I'm not going to be like, okay, well, since it broke through here, we'll get to 62. Okay, maybe 61, then 60. And yes, I do leave a lot of money on the table. Anybody that looks at, I leave tons of money on the table. And that's just because I take my gains. But I'd rather take my profits and redeploy my capital than be green and then give my money, go red on the trade. That's like one of the things I hate the most is being green on a trade, knowing I could have took profits, and then actually close the trade out red. Like, it's disgusting. I don't like it. So, but that's just me. William, what's up? Square broke out of downtrend. Yeah. We'll see. Yeah, excellent. I think, long run, I'm just playing the chart for till Friday. I would prefer it to go down tomorrow and not hold until Friday, but at some point, so you don't see any volatility going down with major bank earnings. Think they would average each other out for a wash, not just Andrew. I'm not saying there's not going to be volatility. There's definitely going to be volatility. I'm just saying volatility will not always continue. Maybe we'll have volatility continue for the next 3 months. Maybe it'll be only the next week. I'm just saying it's been pretty volatile for a long time, and now we're starting to see charts like this on Square. There's some other stocks today that didn't move much either. But so you just kind of gotta look out for that. When I start seeing charts like this, I start thinking about, okay, if the market opened tomorrow flat and move flat all day long, can your account withstand the heat from that? Can you let theta burn you? Can you let the option sellers run? Now, if you're selling a premium, fine. If you're selling a premium, fine. But if you're buying options, do you have the protections in place that you can withstand that? When you're in a losing position, that's why I tell people, like, don't put your entire account in there, because you need money to play defense. You need money to offset. A lot of times when you put a trade on, it doesn't go the way that you want it to go, as I'm sure many of you know. And when it doesn't go your way, you need capital to defend yourself. Otherwise, you just watch your account go down, 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 down. You have no way to offset the losses. You have no way. You could either take it off and take the loss, but people don't like to do that because they get hopeful. They're like, well, I got till Friday, it might get up to here, or it might do this, or it might do that. It might do a lot of things, but what you can control is having money in your account to play defense. Don't let the market dictate your account balance. Don't let the market take your money. Don't let, you know, if you told me you lost 90% of your account value in one day, or 50%, or even 40% of your account value, you know, you let the market do that because you had a lot of risk on. It's not the market's fault. The market's going to do what it's going to do. Ryan's Think or Swim. Andrew, yeah, I wasn't talking super near term, but I'm saying it could. When I start seeing charts like that, when I start seeing consolidation, we could chill. Like if you're looking at you know, this is S&Ps here. If you're looking at in terms of history, you know, we've been pretty volatile for since October. We've been going up and down. Then we're having a pretty quick recovery here. Obviously, you can see like the green bars are getting smaller in terms of recovery, and the bulls are slowing down. And you can see this kind of aligns with what happened back here in January, February of early 2018. So like a year ago, you know, we had some extreme volatility for a few months, and then it started slowing down. And then we started going up. However, you know, we're reaching some thresholds here where like 2,600, I think we need to get above 2,600, need to stay above 2,600 if the bulls want any chance at this. Like if you know, we came close today, like today it hit 25.95, but then dropped hard, then it went back up and then dropped again at close. So I'm not saying we're not going to break through 2,600, but I'm saying you gotta be on watch. Glenn, what's that? Glad you're here. You gotta be on watch here of these levels here. You gotta be careful. Tread lightly. Like don't go all in. I mean, you could be like going all in and say like, okay, it's gonna get rejected at 2,600. Load up on puts and it skyrockets. We go to 2,700 in one day. Don't say it can't happen. The market does things that we don't understand all the time. So when people say, oh, that can't happen, I do not say that. Like in the market, anything can happen. You could get rich, you get poor in one day. Like anything could happen. You could be a multimillionaire overnight. You could also have 1 million margin calls and owe $1 million to E-Trade or TD Ameritrade overnight as well. So, you know, that's why when I talk about movement and where I'm going, I'm just telling you where I think it's going. You know, when I was talking about moving below 2,600, we're going to go fast. We went fast. Now we're back up to this almost the 2,600 mark. If we get rejected here, if we get rejected at 2,600, I'm definitely looking for a retest of like 2,350 area. If we get back above 2,600, I mean, I'm hoping honestly we get above 26. Even though I have bearish positions on right now, I do hope we get above 2,600 just because the amount of money that we made between 2,600 and 2,800 was so much fun, and we had a great time, and we had, you know, the us versus herd fam just went, you know, we just went nuts in this, and everyone was doing pretty well. And you need a two-sided for an options trader, you need a two-sided market. I've left about 700 table this week. Josh, I feel ya. It's not as bad. It's not as bad as when I left. What was that Tesla position? I left on the table. I made $4,000. I left 15 grand on the table in one day. I made $4,000 that day. I was happy, but I left 15 grand on the table a couple months ago. So it's all about. You could also lost 700. You could be red this week. You know, you just gotta be grateful. Take profits and redeploy capital is just one of my things I stick to, and it's keeping me safe. You know, trading people think trading is all about making a lot of money and driving Ferraris and getting rich and everything like that. You know, for me, trading is a stream of income, and it really is just about trading safely. You know, people who don't trade safe blow their account up. Like, I mean, we all know people that went into the market and blew their account up twice, 3 times, 4 times. And at that point, like, dude, you're probably gambling to stop. And then, their gambling mentality is like, no, I got this, I can do it. If you can do it, paper trade, prove yourself. Don't keep wasting your own money and throwing it down the toilet. Best advice ever here. Listen carefully, cut the loss, find something else, take it on the chin, move on to a new thing. 4C, nice to see you, Ryan. If you're new here, say what up. Man, there's so many new people. Like, it's crazy. And Nick got paid today. I don't know how to say your name. It's Class AI. Class AI. Sorry. Ouch, I left 1K last week too. Yeah, I mean, trading is all about discipline. Crypto Slice. Jeff Bezos getting divorced will affect Amazon price. Maybe Jeff will have more time to work, or maybe the stock will go up. just not worried about it. Just not worried. I don't think Amazon shareholders are going to be worried about it. Maybe, it's hard to speculate, but a divorce has nothing to do with the business unless she was a partner and had some sort of management role that played an integral part in Amazon's business. And I don't think that was the case. You got the name, gonna take it easy tomorrow, last hour. Yeah, so that's what I was talking about. Unless she picks up a bunch of shares off. CNBC said, which, I mean, is not that credible, said that she'd want the family fortune to continue growing. So I don't think she's like Steve Wynn's wife, where he was like, with 10 different mistresses and she was trying to shut his company down to like spite him, like it was like last year. I don't think it was like that, because he had like 10 sexual allegations and he had to settle, and he had to cut a check for $1 billion, which, whatever, for him. Like, I mean, the risks going in doing those kind of things, and Pepsi looks like a going rough. Could be in a rough spot. Thoughts from a Coke guy. Yeah, I don't really trade Coke or Pepsi, mainly because they're not growth stocks. If you're looking at Coke, KO, I mean, it did go from 41 to 46 in this year, 50, up to 50. But long term, I don't really trade I don't really trade slow movers like this. I mean, if you're looking at the 5-year chart, I mean, we're not really much higher than we were 5 years ago. So I really only trade growth stocks, which is why I trade a lot of tech stocks. Yeah, I mean, 5 years ago it was 100, now we're at 171, 122. I mean, this is some good swings this year. I mean, don't get me wrong. If you're looking at this year, I mean, 122 down to 96, back up to 122. Some nice swings here, and you definitely could be made money. But if you're looking at Pepsi, the one reason I don't really would trade it is because the volume. I mean, this is not bad. 800 and 900 on the calls. Puts, not so great. Only 200. So really kind of sketchy. I mean, the monthlies, if you're looking at next week's, I mean, there's no volume here. There's some volume on these 109s, but when you trade options day in, day out, you're really looking for liquid stocks, and Pepsi's not really. I mean, they're not. I've seen way worse. Don't get me wrong, but it's not something that I would probably trade. But yeah, I could definitely see a retest of like a 104 area. Gives you about $3 to squeeze out of that. You didn't supply on Coke, that's why it dropped so much. Coke stock price hasn't gone anywhere. Marianne, what's going on? Got paid from Roku, Nvidia. So let's talk about some stocks that you guys want to talk about here. Because it was a slow week for me, I didn't put a lot of trades on. One thing I think was AMD. You guys were saying, you know, went from 16 to 21, made some cash in there. But I mean, there was some. I mean, this was crazy. If you look in just like the last 2 days here, I mean, went from 21 down to 19, back up to 21. Definitely nice two-sided action. It's just, you know, that's hard to hold. That's very hard to hold. Force you, while you're at it, can you analyze KO a bit? Let's go back to the 1 year here. Yeah, I mean, at 50 or 48, definitely would be a trade here. But when you get down to like 45, 46, it's consolidation range. There's not really much like I would be interested in here. You know, it has to break below areas of consolidation or above. As you can see here, when it broke above area consolidation on Coke, opportunity came. And now it's headed back towards consolidation. Opportunity was, now it's back here. So it's either got to go above again or break below for opportunity to hit Coke again. Roku crushed my premium from yesterday, but thanks to USO I finished green. Nice, easy. All right, let's look at, we'll look at Baba. We'll look at Facebook. Baba's one that I personally like to trade just because it's been a fun stock with the trade wars. I personally think that it's undervalued, but it doesn't matter what I think. It matters what the market's doing. So that being said, you know, we made a lot of money, you know, definitely in here over the summer and over the fall. I kind of stopped trading it mainly because the premiums started to get so expensive. But if you're looking today here on Baba, some nice gainers here. I know Josh was definitely one of them. He traded this yesterday, had a strangle on it, you know, caught this 200, 300% move today. So congrats, Josh, on that. I think he made about 50%, 50 to 80%. But what I was looking at here, what I was looking at on Baba actually was, you know, the rejection at the 155 area to go back below 150. It just, for me, you know, the expected move was $4. It gets tough. I don't like to straddle, like, you know, we have the dollar wide strikes here, and then we have the 250 wide strikes here. So it makes it a tough trade. Either I like to be in the, you know, the dollar wide, or I like to be in the 250 wide. I don't like to be on both generally because it makes it hard to kind of balance. But on this one, I was looking for like a short trade. I was actually looking at the 49, the 149 put and the 155 call to kind of balance, but it could happen, but it could not, and it was going to cost, let's see, what was it going to cost at close? I had the 149 and the 155. You know, it was going to cost $1.61, and I don't like to pay, as you can tell by these today, I paid $1.08, $1.32, and $1.30. I don't like to pay more than $1.50 2 days away from expiration, you know. So that's why I passed on the trade. Like, if we're flat tomorrow, like we saw on Netflix, my $1.60 then becomes 80 cents, 70 cents, and you're going to lose money to Theta and IV Crush. I mean, it's just what it is. So over $1.50, I didn't really like the trade. That I was eyeing it. I didn't push the trigger, and it just came down to option pricing. You know, was it. But Baba today, I mean, real nice action. You know, we closed at like 147, gapped up to 150. Nice $3 gap up, and then, you know, we had some volatility, but ultimately went, you know, 3% higher, 3.5% higher. So it's definitely a good stock to trade with the trade wars. You just got to get the right pricing. I made money today twice, same put. King Jacob, let's get to Facebook, Apple, Orgo. Orgo. Yeah, Facebook. So we're in this territory here again with this other stock that we could have potential area of rejected here, 145 area, or we can have consolidation here. It looks like at like 145, 146, we kind of chilled out here before heading lower to 123. So I definitely think, Matthew, what's up? I definitely think earnings is what pushing the market higher right now, with the prospect that a lot of these companies have earnings. Let's see what. Okay, earnings January 30th. So because they dropped so low, people are thinking we're gonna get a lot of people. What a lot of people do is they try to get in before earnings, whether they're good or bad. They start buying stock, and because we were so low, like all the stocks dropped so low, you know, they're trying to get in. But what I was telling you guys, we have to break above the lower highs. Facebook has been a stock where we just keep making lower highs, and that's why it keeps going lower. What I mean by that is high here, then we have the high here is lower, then the high here is lower than this one, then the high here is lower than this one, then the high here is lower than this one, and then it just keeps kind of going down. And we really need to break the trend. It needs to get above 146, and then it needs to get above 156. You know, if we get above 160, definitely things are going to be looking more positive. But right now, Facebook's really just sitting on the edge like that. Apple just closed, or did they? Not really. Let's zoom in on this. So it tried to close the gap today. Here, that gap here needs to get to like 154.85. It didn't reach that today. It's trying to close this gap. We'll see if it does. I mean, it went up $2.50 today. You know, if you're looking at Apple here. You know, pretty nice up day, and then we had consolidation in the afternoon. So you could have gotten something in the afternoon. Probably could pretty good, decent price on it. But yeah, it was only up. These are only up like 70%, 50%. So not great. But you know, it's trying to close this gap here at 160, at 159, 160 area. We could definitely see that it needs to get above this area here. And as you could tell, I mean, the interesting thing that I found about Apple was it kind of predicted the stock market drop. And what I mean by that is Apple started declining weeks. It started declining kind of weeks before we actually had a drop here. So this started, you know, we hit the top on October 3rd here, 233. And S&P's topped out. Actually, it was about the same. Okay. So the one thing that I did see about Apple though is Apple, if you're looking at Facebook and Apple charts, what I just showed you, I mean, this has just been straight down for Apple, since it broke 221. It's been nonstop bleeding. You know, yeah, we've had green days, but they're not even close to in comparison on the red days, and we can't even get back to 160 where we've had some small support. So we'll see what happens here. So it's got to get above 160 if you're going to be bullish, but it could definitely get rejected here. It's having a rough time. Yeah, I think what I was thinking about was back in November when it was 229 and it came back down here to 217. I think that's when we were starting to experience a decline and the market was still going up. And the market wasn't declining, but Apple was selling off. I remember something about that in September. So Apple was selling off, but the market was not. It was before October though. Warren Buffett sold his $4 billion worth of Apple. I didn't hear that. Are you sure? You know, this is a tough trade though, especially to get short, because you're like, am I shorting the bottom if there is one? You know, or am I getting? You know, you definitely missed out if you didn't short Apple on this. You definitely missed out. There's no doubt about it. You know, 2 years ago, we're at 117. So, I mean, it definitely has room to go lower, but there's always going to be people, since Apple's such a well-known brand, and there's always going to be funds that when Apple drops low, obviously they drop pretty low, pretty quick. There's always going to be funds. There's always going to be people that want to add that to our long hold portfolio, which we've been talking about before on other streams. JD. Yeah, JD looks way more bearish than Alibaba. JD, if you don't know what it is, it's another Chinese e-commerce stock. There's money to be made here, and especially since IV's getting dropped down below. But kind of like Facebook, where it keeps making lower highs. So you just gotta play those, and you'll make money. Play those lower highs, you'll make money. Whether it busts through or it gets rejected. So far, it's been mostly bearish. So if you see it getting near those highs and you short it, it seems like that's been the play. 1, 2, 3, 4, 5, 6, 7. 7 out of the last 10 times. 70%, that's not a bad win rate. Just got to be careful how you scale your options or your trades. Look at AMATMU. All right. FC's trying to take up the rest of the hour. But yeah, I mean, yeah, this one definitely looks way bearish. Applied Materials and these semiconductor companies definitely look way bearish before the market. I mean, this was, hit a high back in March and just never came back, and still making lower highs. Yeah, I get what you're saying. You're talking about the trends in the market, which we were talking about in Apple. Same thing here. This started declining back in June on MU. I'm with it. You ever trade the Forex market? Don't need to. And I don't like to trade. It's a personal preference. I don't like to trade political events or policy. I find it difficult because there's a lot of unknowns, like, Forex, you got to keep track of a lot of global news. I think we have a hard enough time keeping track of what our own country's doing, let alone what's going to go on, what's happening with the yen or the pound or the euro or all this stuff. And then, what policies are being made and this and that and this and that. Like, that's not where I prefer to spend my time. Some people enjoy doing that stuff and love learning about it. It's just not, but that's the thing about the market. There's a lot of opportunity for people that have different tastes. I prefer to trade tech stocks and stuff like that because I like to use tech. And I'm interested in what those companies are doing. I'm not really too excited about, the dollar or the euro or, stuff like that. It's not for me. Could be for you. What tickers are you looking at for premium sells? I've been itching to sell premium. The market has been so volatile and the option sellers have been getting so screwed for the past 2 months. I don't want to be the first guy to jump in, if that makes sense to you. I sold some premium last month, and it took a lot of capital and a lot of work to get out with a small profit. And it wasn't fun. It was not fun. Playing bearish or bullish strangles have been way more fun in this market for me personally. People that don't have responsibility of family have more time to follow. Yeah, I mean, if you're single and stuff like that and you got stuff, I don't have that kind of time. So, you do you. Crypto Slaves, NBR. So, Crypto Slaves, I don't know if you heard, but in the beginning of the stream, I was talking about USO. When I got under $10, I don't typically trade stocks under $10. This would probably fit that criteria. Even though, I mean, you got a nice 12% gainer here. But even with like a 12% gain, I mean, these options are only up 200%. And the volume is just, let's see what the monthlies are like. I mean, the volume and the monthlies are better. The monthly here, I mean, this is 18,000 calls, open interest. However, it looks like just some big fund or somebody bought all these, because if you look at the volume on these guys right here on these three calls, obviously somebody knew something here. And if you look at the puts, there's like nothing going on here. And you could tell that, I mean, why wouldn't the puts have any more? Why wouldn't the puts have action? It just seems really fishy that all these calls here for the monthlies have action and no one's buying the puts. And, you know, looking at it went down every day since November 6th to December 28th. I mean, that's just crazy. So somebody was either hedging some stock or doing something crazy. Maybe they were hedging their short position on the stock because they thought it was going to go lower. You know, you don't know. That's why people are like, hey, where do you find these call volumes and where do you find all these things? And at the end of the day, like you obviously you want to go where the volume is, but when you see something weird like this, where there's volume, 18,000 volume on the calls, and if you're looking at like different expirations, there's like not even anything near that. We can go to there. I mean, there's 9,000 on these, but you know, people do different things for different reasons, and a lot of times their portfolio forces them to do things that they wouldn't do without a position. So if they're short NBR stock, maybe this call volume was them to protect their losses, but they want to hold on to the short. You don't know. So you always got, you know, that's why I was telling people, like, I don't do like trade alerts and trade. I'm not going to ever charge for trade alerts, because what I do for my portfolio may not be the best for your portfolio. And it also doesn't teach you how to trade. So just because I trade something, like I trade Microsoft and IBM together a lot. Now, if you were to just pick one of those, you might just lose. Like if you just traded IBM, you might just lose. But because I have Microsoft and IBM working as a team to get to my end goals, you know, that's how that trade works for me. Now, if you just had one of them, and let's say you just bought these calls, you know, maybe this person that bought these calls want them to go to zero, or sold those calls. You know, somebody had to sell these too. Someone had to buy them. Someone had to write them. So there's always two sides to it. So you got to think about that. Just because there was 18,000 call volume today, you know, someone bought them, but also somebody sold them. So keep that in mind. Do you think CMG is going to hit resistance? And Tesla? NVIDIA is a huge missed short opportunity for me. I agree. NVIDIA, Tesla's my short regret as of recent. I do like to short Tesla in here because I have made some money back up in here when it was like 350, 340. You do get some nice two-sided action in Tesla. So I would say for me, I would like to see it to 350 before I put a short position on. But it looks like it's starting to struggle a little bit here. So we'll see if we can break above 340 area. It did, but it hasn't stuck. So we'll see on that. See, do you think NVIDIA, well, let's take a look at NVIDIA. Yeah, NVIDIA, I don't typically like to trade charts like this because you missed the opportunity, and now it could literally stay flat like this for months at a time. Weeks, months. So that's why I typically don't trade. I mean, it went from 124 to 142. So that would be a good run. It's just like, you know, it's hard to time the bottom. It's hard to time the top. You just got to trade momentum, and right now momentum is kind of looking kind of flat. Richard, thank you for the $5. Easy, thanks for the $2, man. You guys are the best. Thank you so much. STZ, what happened? STZ. Well, looks like they had earnings. Yeah, they had, looks like they looks like they reported earnings, and it was obviously not good. Yeah, I mean puts are up 400, 500%, meaning the market didn't expect it. So Richard, late but made it. Welcome. CMG, let's look at CMG. So CMG, I think they've gotten this pretty crazy run. I mean, $100 run in the last 2 weeks. I hoping that if they got their act together, and they got the food policies and the kitchen clean, people washing their hands or whatever. I don't even know what happened there. If it was like corporate sabotage by like McDonald's or someone, like tinfoil hat time, or they legitimately had like food safety issues. I don't think anyone's gonna know. Because if we did find out, then someone did something illegal. But we're coming back up to here. We're coming up to like 530, 520, where last time, went from 520, 530 all the way down to 380 again. So this has been definitely a good stock. The only thing that I would be very careful about Chipotle is just volume isn't that good, and the bid and the ask are wide. So if you're going to trade this, be very, 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 very careful. You can make money quickly, but you could also lose money very quickly. I mean, not only due to price movement, but due to volume. So it's if you've never traded this before, I used to trade a lot of spreads in here, and you just got to be very, very careful. Spreads, it's a lot easier to hit mid price versus, because you're trading two different options versus buying single. Like if you're looking at this is a $100 wide, almost 50. It's like, it's $50, but it's a lot. This one here is $103 wide, but there's only 37 volume on here. So you gotta be very careful about trading Chipotle. Yes, you can make a lot of money. I in the past, like 2017, did very well on it, but there's a caveat. In like Tesla chart, I've been very patient, boy, waiting for time to strike CMG puts. Yeah, you gotta. I mean, it's only had one green day in the last like 10. You gotta be careful with it. Intel, Dell, Intel. Ooh, long. Yeah, I mean, it's just like we were talking about consolidation. Earlier this stream. It's just been consolidation. Actually, if I were going to do anything, it'd probably be short. Just for me. I mean, I would play it. The 48 down to 44 is what I would do. I mean, because looking at the chart, chances are, if you're looking here, it's, up in here, came back down to 44. Up in here, came back down to 44. Then we had like consolidation where it did break higher, went from 46 to 50, but then came back down to 46, and then back up here, back down to 44. So you gotta go with the odds. You may never know where a stock is going to go, and a lot of people ask, like, where do you get your news, or why do you do this, or why do you do that? And honestly, a good 80% of the things that I do are due to just the numbers and the charts. I don't really pay attention unless it's like a big event like Fed, elections, wars, stuff like that. I try not to pay too close attention to the news, because it kind of clouds your judgment of, maybe you were going to make a fundamental or technical play, and then, a news article comes out like, Amazon, like Jeff Bezos getting divorced, and then people start to think like, well, maybe this, that. You know what? It doesn't really matter. Most that kind of thing, it doesn't really matter. A lot of the stuff like CNBC posts and Yahoo Finance is for clicks and ad revenue. It's not to make you a better trader. It's for them to make more money on ads. That's why they love Trump so much. He's easy clicks. If he doesn't get reelected, they're they're gonna lose some money to somebody else that's more boring. I need to make more of a join the stream daily. King Jacob, would appreciate it. Glad you're here. If you're just joining us, or if you're watching for the first time, say what up. We want to meet you, UVH fam. Great group of people. We're at an hour. If this video was of value to you, hit the like button. If it was not of value to you, hit the dislike button. I see we got 1 dislike on there. I appreciate it. I don't mind the hate. You know, the only way you can make things better, is if you know what people like and what they don't like. If you don't like the stream, let me know. Ryan, I do it every day, 30 minutes after market close. So Monday through Friday, unless I have exceptions like yesterday I took off. But mostly Monday through Friday, 30 minutes after market close. If you want to get notifications for when I go live, hit the bell on your phone, or you get notifications from YouTube. Yeah, I mean honestly, I have a lot of fun. You know, whether people, I mean, it's a lot better when people agree with you, obviously, but you know, there's always somebody that doesn't agree with you, and that's okay. I like to talk to the people that don't agree with me, and find a way, like, why didn't you like the stream, and that way we can improve. Unless the person's crazy, then they could leave. I'm just being honest, you know. That is what it is. You know, we're all on the same. You know, and the one thing that I like about the market and this community is, it doesn't matter if you're Republican, Democratic. It doesn't matter what skin color you are. It doesn't matter tall, short, female, male, whatever. We're all trading the same market. We're all wanting to make money. We're all on the same team here. So if we move forward together, there's nothing wrong with that. That's why the market, they should use the stock market to bring the world together instead of divide it. You know? Just saying, I mean, teach people the stock market, they'll be best friends with everybody, unless, no, probably not. But, you know, we're all on the same team here. Easy's going off. So, anyways, guys, yeah, definitely appreciate you. If you guys are new here and you like the stream, hit subscribe. We'll be back here tomorrow. You guys have a great day. Except Bulls versus Bears. Well, yeah, take it easy. It's always us versus hard. Stay safe, stay green. If you're not yet a member of our free options trading groups, Facebook and Discord, links are below. Join that. We'd love seeing you guys there. Connect. We're all in this together.